The growth profile for the next 12 months is really exciting. We've got a lot of things coming together. We've got more acquisitions, we've got more products, insurance broking and other things to come to our network. And we've got some key operating efficiencies in the business to come out in the next 12 months. So it's an exciting time.
COG Financial Services has steadily built its presence in Australia's equipment finance broking, financial aggregation and commercial equipment financing sectors, recently evolved its commercial equipment financing model and now growing its insurance broking capability. Over the next few years, COG will continue to leverage off the uplift in infrastructure stimulus spending planned by all levels of Australian government, and the public sector capex will have small to medium enterprises debt financing the acquisition of equipment they need to deliver on public sector contracts coming their way. Joining me to discuss this and more is CEO Andrew Bennett. Andrew, welcome to TCN TV.
My pleasure.
Now, COG Financial Services takes much pride in its proprietary software system for asset finance brokers. Can you explain what sets this system apart from those of your competitors?
Asset finance broking at its core is a relationship game. You've got people talking to SMEs and businesses, helping them get their loans. But the system is an enabling technology so that the broker can deal with the customer more quickly. So therefore, a broker can have more clients. But it's not like you can go and buy one off the shelf. They're tailored systems, and so our system is proprietary. We've built it from ground up. We're only a new business. We're 2 years into this build phase. But what will set us apart is just the sheer scale. As we get bigger and bigger, we can afford to spend more and more on our system. That then gives our brokers more efficiency, lets them have more clients, and then it just builds and builds and builds and builds over time as we continue to reinvest in the system. And it's a scale game. Unless you invest in the technology, you won't be able to compete in the world in the future.
Absolutely. Now, COG accounts for about 20% of the asset finance broker market, thanks to organic growth and really a steady stream of acquisitions. What market share level do you believe the company could reasonably target in the years ahead before antitrust issues arise?
We're a relatively new business. We've been going 4 years, and through acquisition, we've really grown to 20%. We think in another 4 to 5 years, we'll be twice as big again. We'll be 40% of the market. Beyond that, the ACCC don't like to have too many dominant players. I think beyond 40%, it's probably that we'll start getting into the crosshairs of the regulator. But I think we're some way away from that yet.
Your September quarter net profit after tax and amortisation was more than double for the same period last year, powered by the finance broking segment. Why did both broking volumes and margins underwrite this segment's strong fiscal first quarter showing?
It's been a bit of a wild ride through COVID, obviously, and everybody's sort of had ups and downs. But our business it's been a bit of an up. What you've seen is that as a response to COVID, the government has given the banks very cheap money. That banks can borrow for 3 years at 0.1%. But the government have given this money to the banks and said, you've got to get it out into the economy. So there's a wave of very cheap money coming through the market. So whilst our volumes have been a bit softer, our per unit margin has gone up by more than the decrease in volumes. But from the customer's perspective, they might have been paying 5.5% or 6% pre-COVID, and now they're paying 3 or 4% after COVID. So they've had a big drop in their net payments for leasing. So that's encouraging them to go and reinvest, buy new equipment, and then the other part of it is the instant asset write-off. So there's a lot of policy trade winds that are really keeping the economy moving, and it's all hail to the government. They've done a terrific job in providing the stimulus as it's required. But we're in the middle of that value chain, so to speak. So it's the tailwinds there have been terrific, and it just proves what a robust or anti-fragile business model that we have.
Wonderful. And Andrew, COG Financial Services commercial equipment financing segment, it did suffer a net profit after tax drop in the September quarter, hurt by subdued new chattel mortgage product. What impacted this fall?
COVID, we've got a lending book. So when COVID hit, we took a provision because we expected losses to be greater. Actually, and as things are unwinding, I don't think the losses are going to be that significant. But you just never know. That the auditors always want to add a level of conservatism to the numbers so that nobody can ever turn around and say you didn't get that right. So there's that. So that's impacted our performance. The other part of it is, we were just a bit nervous in terms of wanting to, dial things back a bit with our own money until we had the picture in terms of how COVID was impacting. Like, for example, Melbourne, it looked like everything was opening up again, and then bang, you get a really severe lockdown and trauma in Melbourne. And, we actually had lent only 2 accounts to new businesses in Melbourne, and then they get caught up in the second wave. So as a lender, it's been the lending side of the business has been a bit subdued because we're just a bit cautious and conservative by nature.
Okay, and look, the operating model of COG's commercial equipment segment has recently been reworked. What are the key differences between the old and the new models, and why was this revamp undertaken?
We now own 51% of a business called Westlawn Financial Services. We previously owned about 32% of it, and what the old model was that effectively COG would buy money from Westlawn, add a margin onto it, and sell it through to our broker network. But there's a lot of admin and complexities in that. So now that we own 51%, and we have an option to go to 75%, which we'll more than likely take up in the next year or two, it just seems a bit of a silly, inefficient structure to hop through another set of hands. So we'll just cut the middleman out and just go straight from Westlawn to our broker network.
Okay, and final question, Andrew, what are your plans to generate shareholder returns, and how would you like to see COG positioned 12 months from now?
Oh, look, there's a lot of really good things happening. We've got we've just completed on a new acquisition in South Australia, Access Capital. We've increased our stake in Westlawn, so the immediate focus is going to be pushing more of the Westlawn funds through our broker network. And then we've also got some insurance broking is becoming a more important component of our business. It's growing, and they're very similar type engagements with clients. So we're rolling out insurance broking with broader network is going to be a key driver for us over the next 12 months. But on the other hand, we've bought a lot. We've been very busy over the last 4 or 5 years buying businesses. We've also want to do some consolidation and structuring work to make the business as efficient as it can be, which means taking a bit of cost out of it. So they're more of the same, but there's quite a number of components that we're going to be pulling together in the next 12 months, which will just see volumes and profit continue to grow. Watch this space.
Fantastic. I certainly will. And thank you for the update today.
My pleasure.
And thank you for watching. Now, if you like what you see, please be sure to like and share the video, subscribe to TCN TV and drop us a comment. Tell us who you would like to see next and what you would like me to ask them. Or if you're an investor, send us an email so we can keep you in the loop with the latest ideas to empower.